Okay, we'll start today with a new area. I'm not continuing with capital budgeting. I'm just moving to a small area called as financial services. So there is, I think, chapter 8 and chapter 10, which are small chapters. One is on financial services, second is on money market operation. Let's see how much we can complete today. As far as financial services is concerned, it's predominantly only one thing, which is factoring arrangement. You try to understand what happens in case of a factoring arrangement here. How do you compute effective cost of factoring? How do you decide whether to go for factoring or not? That's the broad theme as far as this chapter is concerned. The focus is entirely on to decide on factoring, whether to go ahead with factoring or not. What is the effective cost of factoring, what are the benefits of factoring, what are the cost of factoring, how do you calculate benefits, how do you calculate cost. That's the broad understanding, or that's the broad analysis you do as far as this chapter is concerned. So in this chapter we try to understand that how do we compute effective cost of factoring. Now factoring is an arrangement wherein what happens is a company sells its products and it has to realize money from its customers. Instead of it doing the collection job, it gives it to an outside agency. That agency buys the receivables. 100 rupee receivable means they'll pay only 98 or 97. That balance 2 or 3 rupees is the charges of the factor. So factor will take care of the collection part. Factor will also give us money in advance. So that is what an arrangement of factoring is all about. The difference between factoring and a bank loan, in a bank loan you just get the money and pay interest. In a factoring you get money for which you have to pay interest, and you also get a lot of services. That is, he does the collection job, he takes care of bad debt. So for all of this you have to pay him a commission. So two things which has to be done: one, you have to pay him a commission, and also you have to pay him a interest. But a factor will help us in saving something called as a bad debt. I can save bad debt because of a factoring arrangement. I can save credit collection cost. What is credit collection cost is, I need a team to manage the receivables. Somebody has to keep calling the customer, collect the money. Instead of doing all of this, I give it to one person and he takes care of all of this. So this is a normal statement which we do. First we try to understand what is the money the factor gives. The starting point for that is credit sales. Based on credit sales and credit period, you will get something called as an average receivables. So if you have a credit sales of 360 lakhs and there's a 90-day credit which you give, your receivables will be 90 lakhs, assuming I'm divided by 360. If you divide by 365, you'll get a different number. Now in this 90 lakhs, he's not going to lend me entire amount. He will withhold something called as a reserve. He will also withhold something called as a commission. And then you get an amount which is eligible, which is, let's assume, 80. This also he will not give it fully. In this 80, he will deduct something called as interest and give me something called as 78. So the factor will lend me only 78, whereas my need is 90. Balance 12, I'll have to put it out of my pockets or go for a bank loan if it's possible. So the factor will fund us some amount. For funding this amount, these are the costs the factor incurs: commission, interest. But you end up saving administration charges and bad debt. Net there is going to be a cost of factoring only. Now this net cost of factoring divided by the amount lent will give you the effective cost of factoring. If the effective cost of factoring is 12% and a bank loan is available at 13%, you go ahead with a factoring arrangement. If effective cost of factoring is 15%, bank loan is 12%, you go ahead with a bank loan. Your final comparison happens between bank loan and an effective cost of factoring. So there will be one problem where you do only effective cost of factoring analysis. There will be a second type of problem where you may have to do something called as a cost benefit analysis. No effective cost of factoring analysis. There is something called as a cost benefit analysis of a factoring arrangement. In a cost benefit analysis, I pay some interest to the factor. Here something will come which says interest saved on bank loan. Like you have interest paid to the factor, you have an item called as interest saved on bank loan, and you will finally get net cost of factoring, which can be positive or negative. If it's positive, you go ahead with a factoring arrangement. If it's negative, you reject the factoring arrangement. Now why that kind of a problem is, you will see certain extra savings happening on the interest front also. As I do a problem, you will understand. So maybe you will have to factor it that way. Now you calculate this effective cost of factoring, which is 14%. If I have a bank loan at 15%, then there would have been an item here called as less savings in bank interest, 15% of amount lent. Automatically your cost of factoring would have become positive. If you are getting a cost as 14%, one of the savings would have been interest at the rate of 15%. Or interest at the rate of 12%. So, if the problem specifically asks you for effective cost of factoring, you will have to do this. Otherwise, you just do a cost benefit analysis and then decide whether factoring is giving money or making us lose money. That is the broad understanding, or that is a broad thing we do in this chapter. Let us directly get into problem solving now. Question number 1. A Limited has total sales of 3.2 crore and its average collection period is 90 days. Past experience indicates that bad debt losses are 1.5%, administration cost is 5 lakhs, prepared to buy the firm's receivables at 2% commission. The factor will pay advance on receivables at an interest rate of 18% after withholding 10%. Calculate the effective cost of factoring to the firm. You go through the question. Okay, they asked for effective cost of factoring. I'll take you through the format and then we get to the effect. Working note 1, calculation of amount lent by the factor. Calculation of amount lent by the factor. Particulars calculation amount. Amount in bracket you can write in lakhs. We will solve this in lakhs. Particulars calculation amount. Now in your institute material the answers would have been worked out in a different manner, but I will end up using the same format for every question. So try to do it. Some problem the answers can slightly vary, that is because of the assumption which institute takes and the assumption which we are taking. Start with credit sales. Credit sales. How much is the credit sales given in the question? How much? So whatever is total is credit, that's all. If the problem is silent, entirely is credit. So credit sales is 320, 3.2 crores, 320. Credit sales is 320. Then after credit sales, you will capture something called as collection period. Collection period. What's the collection period they are talking about? 90 days. Credit sales 320, collection period 90 days. You will get something called as debtors. Now the calculation is 320 lakhs into 90 by 360. I assume 360 and do it. You can write a note saying it is assumed that there are 360 days in a year. 90 by 360. 320 lakhs into 90 divided by 360. You get. Now my receivables are going to be 80 lakhs. I need basically a funding of 80 lakhs. See, The objective is on the asset side you see an 80 lakh entry, on the liability side something should be there. Now what that something could be, it could be equity capital, it could be a bank loan, it could be a factoring loan, it could be a creditor support. Basically you are trying to balance your assets and liability. So when you have a requirement of 80 lakhs on the asset side, something should be there on the liability side. Now that liability side something is going to be a factor loan. Now he is not going to lend you entire amount. First he will say less reserve. What's the reserve number they are talking about? 10% of 80 lakhs. He'll first deduct this. Reserve is 10% of 80 lakhs. Reserve is going to be 10% of 80 lakhs. So he will deduct this item first. He will, instead of giving us 80 lakhs, he will deduct this 10% and give us a lower amount. Now beyond this also there is going to be further deduction. Less commission. There is a commission which he charges. What is the commission percentage? How much? 2% of 80. Commission is 2% of 80. So another 1.6 gone. He deducts 8 lakh for reserve, 2% for commission, and another 1.6 lakhs is gone. So 80 lakhs is my requirement, but 2 items are deducted and you get something called as amount eligible for lending. Amount eligible for lending. The eligible amount itself is only 70 lakhs. Of the 80 lakhs requirement which I have, this guy is not ready to pay me anything more than 70.4 lakhs. He is saying you are eligible to get only 70.4 lakhs. Balance I will have to arrange on my own. Eligibility is only 70.4 lakhs. Now after the 70.4 lakhs, after the eligible amount of 70.4 lakhs, what is going to happen is, you are going to deduct something called as a interest. That is also deducted and then only you give the amount. You do not even give 70.4 lakhs, you end up deducting this also. So less interest, So my credit sales was 320 lakhs, 90 days is my collection period. So I need 80 lakhs of money, 10% deducted, 8 gone, 2% deducted, 1.6 gone, eligible 70.4, this also is not ready to give. What he is saying is 70.4 into what is the rate of interest? 18% into 90 by 360. Now please listen, the factor will keep giving money every 90 days. It's kind of a revolving credit. So he will charge you interest for 90 days, tell you to use it, and then again give you another set of money into 90 by 360. So this also he will deduct it into 18% into 90 by 360. Once you deduct this, what you get is amount actually lent. This is what is going to come to us. Our requirement is 80 lakhs, factor can give only 67 lakhs. You need beyond this, go with a banking loan, take equity, something you have to do. Banking, your factor can pay you only 67 lakh 23,200, and this is a revolving credit. You will give it on January 1. You will again give it on April 1, you will again give it on July 1. Practically what happens is, January 1 when I give a loan, this is for the next 3 months receivables collection. The factor will keep collecting the money, he will keep the money with himself and then again give you 67,23,200 and also give back the reserve portion. Reserve portion has to be given to us. He will not give back the commission portion and interest portion, that is his money. Reserve, moment the money is collected, he will give it to us. Clear? Any doubts on this? So I will get 67,23,200. Now the disadvantage for me is, one is my commission cost. What you see here is the 90 day ka cost. So for a year, what you normally do is take this number into 360 by 90. Take this number into 360 by 90, or indirectly it's 2% of credit sales. Indirectly it will become 2% of your credit sales. So that is the next step we are going to do. We are going to calculate the effective cost of factoring. Next, working note 2. Working note 2, calculation of effective cost of factoring. Calculation of effective cost of factoring. We needed 80 lakh rupees. Banker gave us 6720, or the factor gave us 6723,200. Now we are going to calculate the effective cost of factoring. Particulars calculation amount. Particulars calculation amount. Capital A, cost of factoring. Cost of factoring. There are normally only two costs unless the question tries to give us something else. One is interest, second is commission. Interest and commission. These are the two costs we normally have. Interest and commission. Now what you do for interest is, whatever you write in working note 1, 3.168 into 360 by 90 into 360 divided by 90. 3.168 into 360 divided by 90. What was computed above was for 90 days. $12.672. 12.672 is the interest cost. 3.168 into 360 by 90. Similarly, commission is 1.6 into 360 by 90. $1.6 into 360 by 90. So we have an interest cost, we have a commission cost. These are the two costs we incur. Now there are going to be certain set of benefits with the factoring arrangement. Leave a line. Point number B, benefits of factoring. Benefits of factoring. Like we have costs of factoring, we are going to have benefits of factoring arrangement. Now there can be multiple things. The predominant one is administration cost saving. The question would talk about that. So administration cost saved. Administration cost saved. How much is admin cost currently? Administration cost saved 5 lakhs. Now bad debt cost save will depend on the type of factoring. There is something called as with recourse factoring and without recourse factoring. What is without recourse is, even if there is a bad debt, factor will take care of that. So if it's a without recourse factoring, entire bad debt will be saved by us. If it's a with recourse factoring, then we may not have any savings in bad debt unless the question tries to tell you the level itself comes down. So with recourse factoring means company continues to take up the responsibility of bad debt. Without recourses, I don't have any risk of bad debt. My factor will take care of bad debt. My job is just to sell. Maybe when I am selecting customers, the factor will have a say that don't sell to these type of customer because they are going to be a bad debt and it's a burden for me. So the bad debt loss can be borne by the company, can be borne by the factor. If the problem is silent, then bad debt is always saved. If the problem is silent, there is always a saving of bad debt. How much is the current bad debt number? 1.5 percentage of your 320 lakhs. So savings of bad debt 1.5 percentage into 320. Okay, ideally I should have done one thing. We should have put a total. Okay, just anyway put here total benefits, total cost in bracket capital A. And total benefits. Total costs and total benefits. Total cost is 19.072, total benefits is 9.8. Total cost 19.072, total benefits is 9.8. Any doubts on this? Then you will get something called as bad debt can be? No, I didn't understand. Because I am not going to incur bad debt anymore, no, factor will take care of it. I used to like administration costs, why is it a saving? Company used to incur 5 lakh, company is not going to incur. Bad debt company used to incur, now the company is not going to incur. Same logic, no? Earlier you were having bad debt loss, now you will not have bad debt loss. If the problem is silent, you will save bad debt. If the problem is silent, you are going to save bad debt. So the normal scenario is that the arrangement is going to be without recourse, so it's going to be a saving per se. So net cost of factoring A minus B. Net cost of factoring net cost of factoring 9.272. Then amount lent by factor, which is 67.232. Amount lent by factor 67.232. Clear? Any doubts on this? This divided by this will give you effective cost of factoring. (9.272) 67.232 into 100 to get it in percentages. This is my annual cost for 1 year. What is the amount we are spending? $13.79. This is my effective cost of a factoring arrangement. The factor charges 18% interest, but my cost is a little bit on the lower side because he gives me a saving of 1.5% of bad debt. He also gives me a savings of administration, and against that the commission which he charges is not that high. So that is why we have ended up getting our interest payment is 18%, but effective cost of factoring is only 13.79%. Any doubts on this? Now I need to compare this with a bank loan. Let's assume the bank loan is at 15%. Then I will go ahead with a factoring arrangement. If the bank loan is at 12%, I'll continue with a bank loan arrangement. Now what can happen is less savings in interest on bank loan. If I don't go for a factor, I used to go for a bank loan, and if bank used to give me a loan of 80 lakhs, I don't save interest on 80 lakhs. I save interest on only 67 lakh 23,200. Balance loan I anyway have to take from the bank. If bank used to give me a loan on 80 lakhs, I'll have to continue to get a loan on some balance, some 12 lakh portion. What could be my savings is 67.232 into 15%. If bank loan is at 15%. If bank loan is at 15%, you save this amount, because factor gives you only this much money, he is not giving you the entire amount, and you save this. Indirectly, your net cost of factoring is negative, which means there is a net savings out of a factoring arrangement. Indirectly, there is a net savings out of a factoring arrangement, because we are saving more than what we are spending. The reason for that was, this is a 15% number. If I do a 12% number, because our effective cost was 13.79, you will see factoring is of no use. You are spending more in factoring than in bank loan. So the final purpose is to compare it with an item called as rate of interest on a bank loan or a rate of interest on long-term funds, whatever the company has. Any doubts on this? Clear? So finally, the effective cost of factoring in this case turned out to be 13.79%. Can you proceed? Any doubts? Let's move to question number 2. Go through question 2. Last line of the question, calculate the effective cost of factoring. I'm going to do exactly the same step. Working note 1, calculation of amount lent by factor. Working note 2, effective cost of factoring. So you can start working note 1, calculation of amount lent by factor. Calculation of amount lent by factor. Particulars calculation amount. This is going to be my format. I'll change the numbers alone. Particulars calculation amount, will again do this also in lakhs. You can write the format. I'm not going to do any other format. The same format we are going to use. Okay, what are the credit sales? Read it carefully and tell me the right number. It's 4.8 crore with a growth of 25%. So it's 6 crores. I'm writing 600. Credit sales is 600. 480 plus 25% on it. 480 plus 25%, it is 600. Collection period is 90 days. Collection period is 90 days. Debtors is 600 into 90. In fact, this question has specifically said 360 days. 600 into 90 by 360. We get 150. Then we have a reserve portion. What's the reserve they are doing? 10%. So 10% of 150. The reserve is 10% of 150, which is minus 15. Reserve means if you have 150 lakhs of receivables, factor will say that I am not going to give you the entire amount. I will withhold. So, for example, when we even go for a loan to a bank, if I give a property worth 2 crores, bank will give me a loan of only 1 crore 80 lakhs. So, that is the reserve. This money will be given back to us the moment the collection is done from the customer. Then commission. What is a commission deduction? 2% of 150 minus 3. 2% of 150 minus 3. This is what according to factor is eligible. He will say, okay, boss, eligible amount is only 132 lakhs. Now, in this 132, what can I give? Let's discuss. I am not going to give you 150 lakhs. At best, 132 lakhs is the amount I can give. You are saying bad debt? No, reserve has to be given back. That's the period is there, 90-day period, he has to give me 50. So, he will give me one amount today and over a period of 90 days, he has to give me this 15 lakhs. Whether bad debt happens, not happens, I am not bothered about it unless it is without recourse, unless it is with recourse. So, that we will see as we proceed in the question. In fact, one more thing what happens in a practical world is, you saw last problem 67.232. That's the only amount the factor will give on day 1. After that, what will happen is, let's assume you start into factoring arrangement today, every day factor will give you money. At the end of 90th day, it will become 67.232. Beyond this, factor is not going to lend you anything. It's going to be a continuously same amount. On the 91st day, the factor will collect the money which was there for day 1. He will collect that money, reduce his commission and pass on the amount to the company. He will just pass on that amount to the company. Next day he will collect and pass on the amount to the company. So, at that 67.232, once it was given, that's like a loan throughout the period. For one entire year, that's going to be the loan. Thereafter, it's just a revolving amount. I collect 100 rupees, I give you only 95 rupees. Balance is my commission and interest. I keep deducting that. Interest is what rate they mentioned? 16% into 132 into 90 by 360. So, I will get this amount from the factor, 126.78, 126.72. This is the money the factor will give me. 126.72. Clear? Can we proceed? Next, working note 2, computation of effective cost of factoring. Effective cost of factoring. Particulars calculation amount, capital A, cost of factoring. Same thing I am going to do, cost of factoring. Two items, interest and commission. Cost of factoring, interest and commission. Okay, now listen, interest is going to be this number into 360 by 90. Commission is this number into 360 by 90. 90 days period calculation was this, into 360 by 90 you do it. 5.28 into 360 by 90. Commission 3 into 360 by 90. The total cost is 33.12. Cost of factoring is 33.12. Then comes the benefits of factoring. Again, two benefits: administration cost saved and bad debt saved. Admin cost saved and bad debt saved. Admin cost saved and bad debt saved. What's the administration cost today? 6 lakhs. So I'm going to save that. Admin cost saved is 6 lakhs. What's the current percentage of bad debt? Now please listen. 2% commission and 20% risk with recourse, which means whatever happens to the bad debt, 20% the company has to bear it, 80% the factor will bear it. For example, 6 crores into 1.75, 600 into 1.75 percentage is going to be the bad debt. Now in the past, the entire amount used to be my expense in the P&L. Now what is going to happen is my expense is going to be only 20% of this. Balance 80% I save it. So bad debt saving is there and it's 80% because he is saying 20% risk with recourse. So 600 lakhs into 1.75% and what you save is 80%. What you end up saving is 80%. 600 into 1.75% into 80%. This is what we save. 600 into 1.75% into 80%. The amount which we end up saving. 600 into 1.75% into 80%. Balance 20%, I cannot do anything. That the factor will tell me to pay it. What I can save is only 80%. Get the net cost of factoring and effective cost of factoring. Total benefits and get the effective cost of factoring, and we can decide whether to go ahead with a factoring arrangement or shift to a bank loan. %14.77%. Any doubts in this? Clear? Can you proceed? We'll move to question 3. A company is considering engaging a factor. The following information is available. The current average collection period for the company's debtors and half percentage default. Factor has agreed to pay money due after 60 days and will take the responsibility of any loss of bad debt. Annual charge for the factor is 2%. Administration cost saving is 1 lakh. Credit sales is so much. Variable cost, cost of borrowing. Should the company enter into factoring arrangement? Okay, the question has not asked for effective cost of factoring, and they will not ask effective cost of factoring if something of this sort happens. If the existing receivables period is 80 days and the factor says, boss, I'll bring it down to 60 days, then I cannot do effective cost of factoring. I'll have to do a net analysis and then only get to the answer, because there is going to be certain hidden benefits like reduction of receivables. The receivables itself prima facie comes down, so that's also going to be a saving. So in this type of a scenario, we don't do something called as effective cost of factoring. We just do benefits, cost, net cost positive or net benefit positive, and then you decide whether to go with factoring or not. Clear? Now he is saying he will give the money after how many days? 60 days, and will take up the responsibility on account of bad debt. He is not going to lend money. In this case, the role of a factor is to collect money and give it to us. He is not going to lend any money to us. He will just collect the money and give it to us. So there is no interest which I have to pay to the factor, but I'll have to continue paying interest on a bank loan. I'll have to continue paying interest on a bank loan. But the benefit is, earlier my receivables used to be 1 crore into 80 days. 1 crore into 80 days. Now my receivables is 1 crore into 60 days. So lesser by 20 days. When this receivables come down by 20 days, my interest cost will also come down. That's my first benefit out of the factor. Factor will help me in saving interest cost. He will help me in reducing the interest outflow to the bank. Second thing, he will save the bad debt of 0.5%. That's my second saving. Third thing, he will save 1 lakh of administration cost. Against all of this, he will just ask me for this 2% commission. He will help us in saving all of this, and he will say, pay me this factoring charge. You have to pay me this amount. So there is no concept of calculation of amount lent by factor, because factor is not going to lend us money. Clear? Any doubts in this? Working note 1, cost benefit analysis of factoring arrangement. Cost benefit analysis of factoring arrangement. Particulars calculation amount. Now I can write benefits first, cost first, that doesn't really matter. Net you will have to compare cost and benefits. I'll write capital A, benefits first. Even if you write cost, doesn't really matter. Benefits. The first thing which I am going to capture is savings in bad debt. Savings in bad debt. We will again do this problem in lakhs. Savings in bad debt. What's the savings we have? 0.5% of debtors default. What's the annual credit sales? 1 crore. So 100 into 0.5%. 100 lakhs into 0.5%. Amount in lakhs. 100 lakhs into 0.5%. So we have a bad debt saving of 0.5 lakh. 100 lakhs into 0.5 percentage, there's a saving of half a lakhs on bad debt. 100 lakhs into 0.5 percentage. Second thing which it does for us is savings in interest cost. This is a second thing which factor does for us, savings in interest cost. Now listen, important calculation. My sales is 100 lakhs, or let me first do the calculation here and then I come to it. 100 lakhs is your sales. Earlier it used to be into 80 by 365. Let me take it as 365 itself. This is what debtors was. Now it is 8. Sales continues to be 100 and this number now is 60 days. But another important thing is, if I have debtors of so much, I will not take a bank loan for the entire amount. What normal happens is, when you see in the balance sheet there is a debtor, against that debtor there is some profit which is already there in the debtor. If I have to collect 5 crore rupees from somebody, it's not 5 crores is receivable from him technically, only 4 crore is cost and balance 1 crore is my profit number in that. So technically, whenever there is a debtor, against the debtor there is going to be an item called as reserves and surplus. Why this reserves and surplus come in is because you have already made a profit. The moment you say something is debtor, you have already recognized its revenue. You have already recognized the profit. The question is saying the cost is how much? 80%. So what used to happen is, I never came across this item when we were doing factoring amount lent by the factor, because factor can never know what is my profit margin. He cannot tell that you are making a profit margin of 20%, so I'll deduct that 20% and then give you. So that is where he indirectly put some reserve number, 10%, 15, 20, whatever he wants to do. So earlier I used to take a loan for this number, 80%. Now I'll take a loan only for this number, 13 lakhs. Net, my loan reduces by so much and my interest cost is reducing by into 15%. Now I'll do the calculation here. 100 lakhs into 80%. What is 80%? Is cost of debt is only, sorry, your cost of sales is only 80% into 20 by 365. What is 20 by 360? Is 80 days becoming 60 days into 15% rate of interest. 100 lakhs into 80% into 20 on 365 into 15%. This is what you are going to technically save. Clear? Any doubts on this? Do this. You can have some 4 decimal calculation. $20 by 365 into 15%. It's not that I am paying anything to the factor, just that bank loan interest is kind of coming down for me because the loan itself is coming down. Any doubts on this? Then there's another saving, which is savings in admin charges. Savings in admin charges. This number is directly given, 1 lakh. Savings and admin charges is 1 lakh. This is what is total benefits. I'll end up saving so much money. Total benefits is 2.1575 lakhs. total benefits is 2.1575 lakhs. Any doubts on this? Clear? Can you proceed? Then we have capital B costs. Capital B costs. Benefits is 2.1575. Capital B costs. In the costs, the thing which we have is commission. No concept of interest cost. There are only two costs normally, commission and interest. Interest is not there. He is not lending money. He is saying, I am not in the business of lending money. See, there are three types of people. One who only lend money, example bank. Second, who will only do the collection job and not lend, who can be a factor but without any lending money. Third, he will lend money as well as collect money, which is also a factor. So a factor can be a collection as well as your lending person. Bank will only be a lending person. Commission is 100 lakhs into what percentage? 2%. The net benefit of factoring. It's beneficial for me to go ahead with a factoring arrangement. I'll end up saving some 15,750 rupees. 0.1575 is my savings. There's a net benefit of 15,750. So I go ahead with the factoring arrangement. Any doubts on this? Clear? Can you proceed? Go through question 4. Okay, let's start discussing this. This is a balance sheet of the company and it gives me, I will focus on only one important number, which is receivables. So 3,500,000 is current receivables position of the company. Now I am calling up a factor and say that, boss, why don't you manage my receivables? He is saying he will bring down the receivables to 35 days. He is saying receivables will be brought down to 35 days. Don't worry about it. I'll bring it under control to 35 days. So my existing receivables, if I have to calculate in terms of number of days, do it in the calculator. 3,500 divide by 21,300 into 365. 3,500 divide by 21,300 into 365. How many days? This number he is saying, give it to me, I'll bring it down to 35 days. Like last problem, 80 brought down to 60. He is technically telling us some number. He is also saying that he will reduce the bad debt from 0.9 to 0.6. So first of all, there is a reduction in bad debt. This benefit is going to be there whether it is with recourse or without recourse. On top of that, if it's without recourse, then I save more. Then I end up saving more. Then he is saying you will also save some 40,000 per year on account of administration. He will lend us only 80% of the revised book value of trade receivables. Interest rate is going to be 2% higher than what ABC is currently paying. XYZ would charge a 0.75% on a with recourse. With recourse means bad debt risk lies with the company. Bad debt risk lies with the company. With recourse means he will come back to us. Otherwise, he will charge 1.25%. He is going to say, I will charge a higher rate and take up the risk of bad debt. You want me to take the risk of bad debt? I can take it, but then I'll charge you 1.25%. You are required to calculate or evaluate the proposal of XYZ FinCorp. Clear? Now let's first calculate something called as how much is the reduction in receivables which is going to come in. Working note 1. We'll do this problem in thousands. Working note 1. Calculation of reduction in receivables. Particulars, calculation, amount in bracket in thousands. Particulars, calculation, amount in bracket in thousands. Calculation, amount in bracket in thousands. In bracket in thousands. Point number 1, existing receivables. Existing receivables 3,500. Existing receivables 3,500. Then receivables in factoring arrangement. Receivables in factoring arrangement. Receivables in factoring arrangement. This number is going to be 21,300, and he is saying he will bring it down to how many days? Into 35 divided by 365. You can round off the number. 2042 thousands. 2042 thousands. When you do the other calculation, we will work with 2 decimals. Reduction in receivables. $1,458. Reduction in receivables is 1,458. Wherever there is some reduction in receivables, you cannot do effective cost of factoring. You'll have to do only cost benefit analysis. Reduction in receivables 1,458. Any doubts on this? Working note 2, cost benefit analysis of factoring arrangement. Cost benefit analysis of factoring arrangement. You will have particulars with recourse, without recourse. Both options are there. I am going to evaluate both and then decide what is to be done. Particulars with recourse, without recourse. Particulars with recourse and without recourse. Either it's a with recourse factoring or a without recourse factoring. Two types of scenario are possible. My first saving is administration cost, second saving is bad debt, third I'll do something on interest. I'll explain as I do it. Work capital A benefits, savings in bad debt, savings in bad debt, savings in bad debt. This number is 21,300. If it's with recourse, you save 0.3%. How 0.3%? From 0.9 it will anyway come down to 0.6. If it's without recourse means factor cannot come back to me, you save the entire 0.9%. So either you save 0.3 or you save 0.9. So with recourse saving is 21,300 into 0.3%, and this is 21,300 into 0.9%. Either you save 0.3 or 0.9. Savings in bad debt is either a 0.3% or a 0.9%. 0.3 and 0.9, 63.9 and 191.7. Savings and admin charges. Savings and admin charges 40,000 per year. Okay. Now coming to the next part, there is this reduction in receivables happening. I need to factor it somehow. Earlier what I used to do is, I used to get a loan at a rate of 7%. Now factor is saying, I am bringing down your receivables and I will give you a loan at the rate of 9% and I will lend you only 80% of the revised book value. Now just for an imaginary purpose, let's take that he used to get the entire amount as a loan. Whatever be the amount, that doesn't really matter. From a comparison point of view, let's understand that he used to take the entire amount as loan. Then earlier the interest used to be this into 7%. This used to be the interest expense for him. He used to take a loan on this at the rate of 7%. Now what is going to happen is, 80% of this he will take a loan at the rate of 9%, because factor will give a loan only at the rate of 9%. Balance 20% again I will go to the bank. 20% again I will go to the bank and take a loan at the rate of 7%. One is at 9%, another is at 7%. In this process, I will end up saving interest of some 69 lakhs. I'll end up saving interest of some 69 lakhs. Any doubts on this? Now, how do we show the 69 lakh saving is, this into 7% is the interest saving. This into 7. Why is 7%? Because earlier you were paying interest at the rate of 7%. This is your interest saving. Whatever is the reduction in receivables, last problem 20 days by 365 into some rate. So, I am going to save this interest, but I will have to pay something extra interest. What is that extra interest is? On this 80%, I am not bothered about the balance 20%. On this 80%, I will pay extra 2% interest. On this 80%, I will pay extra 2% interest, and my net saving is 69.34 thousand. My net saving is, so this will come as savings in interest cost, and this will come as extra interest cost. Why extra interest cost? This factor guy is saying I'll charge you 9% rate of interest. If he was charging 7%, I wouldn't be bothered about calculating extra interest cost, because 7% is the rate and the factor is also charging 7%, not really bothered about it. The problem comes in when the factor charges you a higher rate. Now I can do a detailed calculation like this in a separate working note if I want, or I can just do a quick calculation, which is savings in interest cost is whatever is your receivables which is coming down, that into 7%. What is the extra interest cost is whatever is the receivables you have on that 80%, because factor is saying I'll give you only 80%, and on that 2%, because he is charging 2% more. Clear? Any doubts on this? 20% I'll continue to take a loan at the rate of 7%. In the, no, it's not covered, no, it is here 2042, it is sitting there. No, so 2042 is sitting there. I consider savings only on this. Earlier my loan used to be this into 7%. Now my loan itself is going to be less. But the problem is a part of the loan is going to be at 7%, a part of the loan is going to be 9%. So net first thing I save into 7%. But a proportion of the loan which is at 9%, that's my extra cost. So earlier loan is 3,500, now the loan is only 2042. Of that 2042, factor will give 80%, bank will give 20%. So on that extra 20%, I'm not paying anything additional. Earlier also I was paying 7%, now also I pay 7%. What do I save? I save this much. What do I pay extra? 80% of 2042. Any doubts on this? Any doubts on this? Now write savings in interest cost. Savings in interest cost. $1,458 into 7%. 1458 into 7%. Now listen, this is exactly the same thing which you did in the previous question also. The only difference is previous question did not talk about lending and charging a higher rate. Here there is a lending and there is going to be a charge of higher rate, so that will come as an extra cost. So total benefits. Total benefits. Benefits is 205.96 and 333.76. Any doubts on the benefits number? Now capital B, costs. To get to these benefits, I have to pay certain amounts. Capital B, costs. The first cost which I have to pay is commission. Look at the appropriate percentage and write it. Commission is with recourse. What is the commission? What percentage? 0.75. So 21,300 into 0.75%. 21,300 into 0.75 percentage, and the non-recourse one is 1.25%. 0.75 and 1.25. Normally, ideally it would end here, but in this case he is saying this guy is going to charge me some extra interest for the amount which is lending. On the amount which the factor is lending, you have to pay extra interest. Any doubts till now? Then incremental interest in bracket new receivables into 80%. Why 80? He is giving this much money only, into 2%. He is paying extra 2%. $2042 into 80% into 2%. That's an extra interest which is going to flow out of the company. You saved some money, but you are also required to pay something extra. Total costs. Again, there's a net benefit of factoring. You end up getting a benefit in the factoring arrangement. Net benefit of factoring. I'll go ahead with the without recourse factoring. That gives me the extra benefit. So I'll go ahead with an arrangement which is called as without recourse. I'm okay to pay an extra commission and go for an arrangement which is without recourse. We'll save 34,083, whatever number, 34,838. An arrangement which is without recourse. The way in which institute solution can be a little different. You end up solving this manner. Mostly the answer will match. At certain places it may not match. I'll tell you when it doesn't match. 34,838. Any doubts on this? So you can finally write the company should go ahead with without recourse factoring. Should go ahead with without recourse factoring. Should go ahead with without recourse factoring. Question number 5 is going to be homework. I don't want to do it here. You are going to learn anything extra there. Go through question number 6. Okay. Now coming to this question, there's a company which has been doing sales of around 50 crores. In that 20% is being paid ahead of time and 60 days is the credit period for the balance. So net the credit sales is 40 crores for our analysis purpose. These payments have been coming late by 18 days, which means the collection used to happen only by 78 days. The past experience indicates that this losses is 0.6%. This 0.6% would be on the not the overall sales, again only on the credit sales. That's what is normal understanding. The credit, your losses are only on the credit sales. Some administration charges and all is given. I have two options: a non-recourse export factoring agency by charging 2% commission. He will charge us a 2% commission. He will give money to us at the rate of MIBOR plus 1.75%. That's the rate he wants to charge. The MIBOR rate currently is 6% and he wants to charge us 7.75%. He is also going to withhold 20% as reserve. There's an insurance company which says, I'm going to give you an insurance, you just need to pay a premium of 0.45%. Covering 85% of risk of non-payment. What is this 85% risk of non-payment is? You are reducing your bad debt by 85%. A Limited can also get an advance of 75% of the value insured at MIBOR plus 1.5%. MIBOR, and currently the company is taking loan at what rate? MIBOR plus 2%. Now coming to the factor, when I analyze the benefits and the cost of a factor is, the first benefit for me is my bad debt will come down. Clear? The second benefit for me is receivables collection cost will come down. Admin charges are going to come down. Third thing is, I'm going to save some interest also. How I'm going to save interest is, earlier I used to take a loan at MIBOR plus 2%. Now he is giving me a loan at MIBOR plus 1.75%. So indirectly, whatever the money this factor is giving, I save 0.25%. I save 0.25% of whatever money the factor gives. There's no reduction in receivables. He's not telling us, helping us in reducing receivables. Receivables will continue to be whatever be the amount we had. So last problem when we did, we had these things. There was a savings in interest cost and there is an incremental interest cost. This concept is not there because you are not saving receivables. This concept is there, but it's not incremental, it's decremental. He is charging a lower interest rate. He is saying, I'll charge you only MIBOR plus 1.75, whereas my bank has been charging me MIBOR plus 2%. So technically I end up saving some money there. So factor, you save interest to some extent, you save bad debt, you save administration. Against all of that you pay commission. Against all of this you end up paying commission. Any doubts in this? When it comes to insurance agency, he helps you in saving bad debt. He helps you in saving interest cost because he is giving a loan at MIBOR plus 1.5, but he will not save administration charges and all. He will only save these two, and against this you have to pay 0.45% of the sum insured. Clear? Any doubts in this? Working note 1, cost benefit analysis of two alternatives. Cost benefit analysis of two alternatives. Particulars, factoring, insurance. Factoring and insurance. Capital A, benefits. Now let's write the format. You calculate figures in some time. Savings in bad debt. Savings in bad debt. Savings in admin charges. savings in admin charges, savings in interest cost, savings and interest cost, total savings, capital B costs, capital B costs, commission cost, insurance premium cost, commission cost, insurance premium cost, total cost and net cost and net benefit. I would want you to fill these numbers. I have given the format. Try filling this table. Can you tell me what is the saving in bad debt in a factoring arrangement? How much? We'll do it in lakhs. 20. It is 4,000 into 0.6%. 4,000 into 0.6%. In an insurance, it's broadly the same, but you save only 85% of this. 15% still I'll have to bear it. 24 and 20.4. Factor will help us in saving admin charges of 60 Insurance guys are not going to help us in any way. Yeah, any doubts? 60 and 0. The most important one is this. I hope you guys have done it properly. It is 4,000, which is your credit sales, into 78 days by 365. 78 days by 365. 360, sorry. 78 by 360 into. This guy is ready to give loan only to the extent of 80%. He is going to hold back 20%. So I get a loan of only 80% of this amount. Whatever he gives me as a loan, I have a saving of 2 as compared with 1.75. My bar plus 2, my bar plus 1.75. So net into 0.25%. 4,000 is the credit sales, 78 days is the receivables. On that, this guy is giving me 80% loan. On that, I'll save only quarter percentage. 1/4% is what you are going to save. Any doubts on this? Depends. So I agree on your point. It can be 78%. Some problem institute has done into 80%. So where we are doing this detailed calculation of amount eligible for factoring, I normally deduct commission also and do it. In problems where I do it this way, we normally don't deduct it. There's no consistency. I cannot say that whether you are wrong, perfectly right, but most of the question, the calculation has been done this way. So it all depends on the factoring terms of agreement. The terms of agreement will say whether the commission will be deducted and then reserve will be deducted, whether commission will not be deducted and only reserve will be deducted, that the terms of the agreement will specify. But yeah, question number 1, and this has no consistency. There I did differently, here I am doing differently. This much I can save. We'll keep 2 decimals. 4,000 into 78 by 360 into 80% into 0.25%. Into 78 by 360 into 80% into 0.25. Now other side again into 78 by 360, but this guy is ready to give me loan only to the extent of 75, and he gives me a loan at what rate? 1.5. So he helps me saving 0.5%. This guy helps me in saving 0.5%. Now my commission is going to be on credit sales, not overall sales. Commission is 2%. 4,000 into 2%. Insurances. Almost same, but still we'll have to go ahead with the first option. 5.73 lakhs and 5.65 lakhs. 5.73 and 5.65. Can you proceed? Any doubts in this? Clear? I'll proceed to question 7. Go through the question. Please go through question. Okay, now let's discuss this. Today, the administration cost for the company is some 10 crores. They have a policy of 2/10 net 30. What is 2/10 net 30 is? You get a discount of 2% if you make the payment in 10 days. Otherwise, you need to make the payment in 30 days. That's the policy. 2/10 net 30. Get a discount of 2% if the payment is done in 10 days. Otherwise, please make the payment in 30 days. The historical track record is saying that 40% of the customers pay within 10 days. But balance people are paying in 90 days. I didn't want them to pay it in 90 days, but they're ending up paying it in 90 days. The requirement is they should ideally pay me in 10 days, but they are going to pay me only in 90 days. Sorry, 30 days. They are paying me in 90 days. Some bad debts. These were the projected sales for the next year. Now, I have been funding my receivables in the ratio of 70:30. 70% is bank loan, 30% is long-term funds, and overall my cost is 13 and 15. Some weighted average I'll have to do and get to the cost. Because of some escalating costs, I finally decided that let's go for a factoring proposal. Totally, I have 4 proposals. Fine Bank Factors has 2 proposals, with recourse, without recourse. Rough Bank Factors has without recourse and with recourse. So totally 4 proposals are there, and the 5th proposal is in-house management. I continue to manage my receivables as I have been doing. I will have to evaluate all this 5 and then decide what is going to be the answer, which proposal the company is going to factor in. Working note 1, evaluation of in-house management proposal. Evaluation of in-house management proposal, or cost of in-house management, not evaluation, cost of in-house management proposal. Particulars, calculation amount. Particulars, calculation amount. We'll start with currently what are the expenses the company is incurring. Administration cost. We'll do it in crores itself. Administration cost. How much is the admin cost we are incurring? 10 crores. Bad debt cost. Bad debt cost. How much is the bad debt we are incurring? $15 crores, half a percentage of total sales, 15, yeah, sorry, 1.5%, 15 crores, 15 crores. Then cash discount. Tell me how you calculate it, show it in the calculation column and then the amount column. Cash discount. Tell me how are you calculating it and then we write the amount. 1000 into what into what? What's the computation you're going to follow? 1000 into 40% into 2%. Only 40% people take it. So 1000 crores into 40%, and in that I give a discount of only 2%. So 1000 into 0.4 into 2%. Then we have last item called as financing cost. Financing is technically like an interest, note 1. Financing cost, note 1. Total cost and come down, note 1, calculation of financing cost. Again particulars, calculation amount. Calculation of financing cost, particulars, calculation amount. Particulars, calculation amount. Okay, we'll start with credit sales. Credit sales. What's the sales? 1000 crores. There are going to be a little bit of an issue in the solution. I'm just trying to follow whatever is institute giving, and I'll tell you the final issue which is there in the solution. There's going to be a small issue in the last part when I come to the solution. Credit sales 1000. Then I write something called as, listen, average collection period. What is my average collection period? Is 40% into 10, because 40% of the people pay in 10 days. 60% into balance 60% pay in how many days? 90 days. They are not paying in 30 days. I have been telling them to pay in 30 days, but they are not paying. They are paying it in 90 days. This will give me the average collection period, and this only will tell me how much debtors I am going to have. 40% into 10 plus 60% into 90. The credit period could be 30 days, but money is coming in 90 days. So this will give me average collection period. How many days? 58, and based on that, debtors with 2 decimals. Debtors 2 decimals. Clear? Any doubts on this? My debtors number is 158.90. I'll do 2 decimals. Now, cost of capital. This 158 is going to be funded with some mix. There's a mix which has been decided by me, 70-30 mix. So I'll get something called as a cost of capital. Cost of capital is the weighted average. 70% is at what rate? 13 or 15? 70% is what? 70% is bank credit. 30% is own funds. Bank credit is at 13%, own funds is at 15%. So 70% into 13 plus 30% into 15%. %70% into 13 plus 30% into 15. Effectively it's 13.6%. Your cost of capital is 13.6%. And my financing cost is 158 crore into 13.6%. I need this much of funding. For the entire year, this is what my cost is going to be, 2 decimal. $158 crore into 13.6%. In the in-house management, I end up spending 54 crore rupees. That's the amount we are spending on in-house management of receivables, 54 crore rupees. In-house management is 54 crore rupees. Now, when I go with factoring arrangement, I'll just do the cost calculation. No concept of benefit, saying saving in bad debt, saving, all of that I don't want to do. I'll just do the cost. If the cost is less than 54 crores, I go ahead. If the cost is more than 54 crores, I kind of reject it. Now, before doing the factoring, the one important thing which I want to know is how much the factor is going to give me, because that will help me in calculating something called as interest cost. So, working note 2, calculation of amount lent by factor. calculation of amount lent by factor, particulars and 4 columns, the 2 proposals with recourse, without recourse for both the banks. Particulars, you have fine bank and rough bank. With recourse, without recourse, rough bank with recourse, without recourse. I'll try to follow as much as possible with what institute solution is. I'll also tell you the logical gaps which are there. Now, when you get into a factoring arrangement, he is saying, boss, I'll give you the payment in 30 days. That's the period at which I'm going to do the calculation. He will advance 88 and 84, which means reserve is 12 and 16. Advance is 88 and 84, which means reserve is 12 and 16. Discount charge and advance is nothing but interest charge. He is going to charge you an interest of 21 and 22. Commission is something which you obviously know. Now, when you get into a factoring arrangement, they are saying there is going to be an additional sales of 10% of the projected sales, because people who were trying to collect the money, now I have released them and told them to do something else. Now, institute in the solution, when they did the factoring solution, they have taken 1100 crores as the sales and done all the calculation. Perfectly fine. 1100 crores is perfectly fine. But the only problem is for 1100 crores sales, the cost is obviously going to be higher. When in-house management, you just analyzed it at 1000 crore. Either both should be 1100 crore analysis, or ideally that let it be 1000, let this be 1100, and there should be, after calculating all the cost of factoring, I have to subtract an item called as contribution from extra sales. Because when you do extra sales, there is an extra profit also associated with it. Ideally, I should have deducted that. That information is missing and institute has kind of ignored it, which is not a logical thing to do, because when you do in-house management, you say sales is only 1000 crores. You have all the items, I'm perfectly fine with it. When this 1100 crores, both are same. 1000 crores, 54 crore expense. 1100 crores, some 60, 70 crore can be the expense. But there should be one extra item called as reduction or increase in contribution. Increase in contribution ideally should have been there, not there in the question. If the question had talked about a ratio, I would have ideally deducted that. I will not miss out on that information, because that is something which is going to be a benefit for the factoring arrangement. Clear? Any doubts on this? Now let's start first. Sales, credit sales, 1100 crores. Credit sales 1100 crores. Credit sales 1100 crores. Next comes receivables. How many days they are going to collect? Into 0.3. Sorry, into 30 days by 365. Into 30 days by 365. Into 30 days by 365. I'm going to have a slight change in the format to get to the answer which is closer to institute solution. So don't rush up. Receivables we have got less commission. You deduct the appropriate commission for the various scenarios. Less commission. Fine bank with recourse, what commission? Without recourse, what commission? Rough bank with recourse, without recourse. fine bank with recourses 4.5, so into 4.5% with recourse. Okay, sorry, 2.5, sorry, 2.5 and the rough bank is 1.8 and 3.6, 1.8 and 3.6. Now listen, we used to go to less reserve. Now institute, they have done calculation a little differently, but the base calculation has been this. Then they have written something called as net receivables. Net receivables, and then deducted the reserve on this. Your reserve normally used to be the overall receivables number. Their reserve is on net receivables after deducting commission. Less reserve, less reserve, the reserve number is with recourse is 12% and without recourse is 16%. 88 advance means 12 is reserve, 84 advance means 16 is the reserve portion. So with the recourse 12%, 12%, 16%, then we have again 16%. Just let me know if there's any error there. No, percentages are incorrect. 12, 16, 16, 20. Just check, is there an error with the percentage? Otherwise this should be the number. It's on net receivables. 12, 16, 16, 20. Twelve, 16, 16, 20. Can I proceed? Amount eligible for lending. I've done a little bit of a change in the computation. It will all depend on the terms of the agreement. The agreement will tell what is going to happen. In case you have an extreme confusion in exam, write your assumption that how are you deducting these calculation. You are deducting commission, your reserve is on overall receivables, net receivables. Amount eligible for lending. $77.57, $72.53, $74 and $69. Any doubts on this? Amount eligible for lending. After amount eligible for lending, we are going to get something called as less interest. That interest is that discounting charges for 30 days into 365. Interest is your discounting charges. This into 0.21 into 30 by 365. You can have small up and down because of rounding off issue, don't worry about it. Into 21% into 30 by 365. %, into 30 by 365. That's your with recourse part. Next is 22%. Be careful, they may shuffle the numbers at times. 21, 22. They have shuffled the numbers for rough bank. It's 20 and 21. With recourse is 20%, without recourse is 21. Amount actually lent. After this, I'll have to do a small calculation, complete till this. Okay, now I'll calculate an item called as financing cost, and I'm going to use this like we used it in your working note 1. Now my financing costs are going to be two types. Listen, interest to factor and cost of balance receivables. Interest to factor is 1.34, whatever number you see there, into 365 by 30. I kind of reverse it. That's for a 30-day period. I do into 360. Listen for some time. Into 365 by 30. This is as far as paid to factor is concerned. The problem in my scenario is I need funding of 90 crores because my asset side is going to say 90 crore receivables. But factor is paying me only 76 crore. Where is the balance going to come? Balance has to come through long-term fund. Bank will not give a loan now. Because what ideally happens is you can either take a bank loan or a factoring. Both are kind of a difficult scenario to win. Till now I never discussed about this because never they had given a cost of long-term fund and a cost of a bank fund. What is the cost of a bank fund? Bank loan, what is the cost? 13%. And long-term fund? 15%. So the balance money is going to be like this. Balance receivables, which is 90.41 minus 76.23. This is a revolving amount which will be there throughout the year. It's not, it's a 30-day period. It's going to be there throughout the year. Into 15% is the interest on long-term fund or cost of long-term fund. Like we did a weighted average of some 13 and 15. Here for some it is 21, 22, 20, 21, and for some it is going to be a number which is 15%. So these are the two costs which I am going to incur on day 1. I am going to incur this on day 1. I am going to incur this throughout the year. This is the amount we are going to incur. There is an interest cost on paid to factor. There is also an interest cost or a cost of, what can be this cost? This can be a dividend also, because you need some money. That money when equity guys bring in, they will say, boss, pay me dividends on that. That could be a 15%. Could be a preference dividend, could be a equity dividend, could be anything. But the point is, on your own funds, you have to charge 15%. Your requirement is some, if I prepare a balance sheet, it will show 90.41 on the asset side. Earlier, it used to show 158.90 on the asset side. Against that, 70% was the bank loan, 30% was the own funds. Bank loan 13%, own funds 15%. Now, against 90 crore, factor will give 76, which is at the specified rate, whatever be the rate. Balance I have to bring on my own. For that, I will have to pay 15%. And put together my total financing cost. This is what is going to be the total financing cost for the various alternatives. Clear? Any doubts on this? Please compute this now. Okay. Now institute in their calculation, which I cannot follow exactly what institute has done because there's a little bit of a logic gap here. Till now, at least, depending on the understanding, we can go. Institute has done this way: overall receivables minus amount eligible for lending, and they have deducted, saying that amount eligible for lending is what they deducted, and they multiplied with 15% to calculate the in-house management, or to calculate the cost of balance receivables. This can happen if the factor gives you this amount rather than giving you this amount, and this is specifically mentioned. The question clearly says discount charges in advance, which means he will deduct and then only pay it. So this is one gap which is as far as our solution and institute solution. Institute at this part have taken 1.93. I cannot follow that because exactly opposite of what the question talks about. Other things based on assumption I have tried to tilt it, but this part is exactly opposite of what institute has done. Clear? Next working note: calculation of total cost. Calculation of total cost of various options. Total cost of various options. Now, there are only three costs. In that, the primary major one I have already calculated. One is financing cost, second is bad debt cost, and third is, listen, first one is your financing, second is bad debt, and the third one is your commission cost. Beyond this, nothing is going to come in. I am not going to write all of this. Technically, we used to write all of this in savings. Administration cost, we used to write it as saving. I am not writing it. Bad debt, why I am writing this, in some it will come, in some it will not come, because if it's with recourse, without recourse, you think logically and then write it. Cash discount, the understanding is in a factoring, cash discount will not be there. That's why that got eliminated. We are just writing all the cost. If you do a cost benefit analysis, then you would have written savings and administration cost, savings and cash discount, savings and bad debt. Instead of writing the cost, you would have written as savings. You would have also written savings and financing cost. You would have ended up writing all the items. So instead of doing it that way, let's just capture the amounts. So three amounts, I leave it to you to calculate: financing cost, commission, bad debt, and total cost. Think logically and write these amounts: financing, commission, bad debt, and total. Financing is already done. Our job is just to copy it from that earlier working note. Financing cost is already computed. Commission, either you do into 365 by 3 or 1100 crores into those percentages, which is 1100 into 2.5%, 1100 into 4.5, 1.8, 3.6. Bad debt is 1.5%. Where will the bad debt come? Where should I write the bad debt? Don't look at your previous solutions, it's not going to make any sense there. You tell me, where should I write bad debt? It's going to be in with recourse, because that is where you will have this expense. I'm just writing the cost, I'm not writing savings. If it was a saving in bad debt, I would have written in without recourse. If it's a cost of bad debt, I'll write it in with recourse. Now listen, institute for this, they have done 1000 into 1.5%, which is also not logical. I'll do 1100 into 1.5%. That's not going to again match. I'm just telling you now itself. Institute has done 1000 into 1.5%, which is not going to match. It's going to be, which one? I didn't understand. Yeah, 1100 crores. So your bad debt is going to be 1100 into 1.5% logically. Your bad debt is going to be 1100 crores into 1.5%. I'm not talking about a savings and bad debt here. Our calculation is not savings and bad debt. Our calculation is cost of bad debt. So it's going to be 1100 into 1.5%. Without recourse, obviously it is 0. One important element which is getting missed out is that extra sales gives you some extra benefit that is kind of got ignored in entire analysis. That has been entirely ignored in our analysis. Can't help it, the question talks that way. Now my net benefit of factoring is 57.41 minus the cost which earlier I used to incur 57.41 in in-house management, working note 1. Now if your costs are increasing, it's a disadvantage. If costs are coming down, it's a benefit. Net I'm going to go with rough bank with recourse plan. This is what I'm going to finally decide on. Rough bank with recourse. Which one? How much it is? Sorry, 54.61. Sorry, my mistake. Subtract 54.61 then. But 54.61 minus this number. Still end up going with this party. Rough bank with recourse. One important thing which got missed out in the entire analysis is the benefits arising out of that extra sales. An ideal comparison would have been, when we did all this, we should have started with 1000 rather than 1100. That's an ideal comparison. In-house management 1000, this also be 1000, compare, decide, that's fine. But if this is 1000 and that is 1100, it doesn't make sense. Because for 1000 crore, you have a cost of this much. For 1100 crore, obviously the cost is going to be higher. So it ideally doesn't make any sense to compare it that way. Can't help it. Institute question, they have asked this second time also, and a similar solution was given. So ideally, you can finally write a note. The benefit, you can write a note. You can first write that the company should go ahead with rough bank hyphen with recourse factoring. rough bank hyphen with recourse factoring. Note, in-house management cost has been computed for 1000 crores, whereas the factoring related cost has been calculated for 1100 crores. Full stop. Extra profit on 100 crore sales. Has been ignored. Due to absence of information. Clear? 8 you guys can do at home. We'll quickly try to close 9, 10, 11 if possible. Let's start with 9, maybe some 15-20 minutes. Just go through question 9. Just go through 9. Okay. Now, this is what is normally you will see in a lot of appliances which are getting sold. They will talk about something called as a flat rate of interest, but effective rate will be hidden in their analysis. They will not give you the exact rate. I'll first calculate flat rate of interest, then come to effective rate of interest. Working note 1, computation of flat rate of interest. Computation of flat rate of interest, particulars 12 months, 24 months. And 24 months. Point number 1, amount repaid. In 12 months, you repay 3,800 into 12. Amount repaid is 3,800 into 12. In the other one, you pay 2,140 into 24. 2,140 into 24. This is what you repay. For what are you repaying this? For taking a loan of, how much is the loan we are taking technically? 40,000. I take that loan because I am not paying that. So instead of paying 40,000, these guys have made me pay 45,600 and 51,360. Loan taken. Subtract it and call it as interest paid. loan taken and then interest paid. 5600 and 11360. Now this is what normally is advertised, flat rate of interest. The person will say your interest is not that high, it's 5600 divided by 40,000. Listen for a minute, 5600 divided by 40,000, it will come out to be 14%. In this case I am dividing by 2 because I calculate interest for 1 year. This is a 2-year interest which you pay. Again divided by 40,000. So in one case we pay 14%, in the second case we pay 14.2%. 14 and 14.2%. 14% and 14.2%. Clear? Now if flat rate is 14%, your effective rate is broadly going to be double of this. That's what the rate will be. That's what we are going to do now, calculation through an IRR approach. Effective rate is always through an IRR approach. Next working note, computation of effective rate of interest. Computation of effective rate of interest. You will need one positive, one negative NPV. Effective rate of interest. All the numbers are below, so it's not going to be long calculation. Year, not year, period, cash flow, PVF, DCF, again PVF, DCF. Period, cash flow, PVF, DCF. For 12%, I am going to use these two rates. For 12 months, 2.05 and 2.10, somewhere in between the IRR is going to lie. And for the other one, we will do 2.10 and 2.12, 24 months. So it is like this, period 0 and period 1 to 12. Period 0 and period 1 to 12. Period 0 is 40,000. And 1 to 12 is 3,800. $40,000 and this will be at 2.05%. This is 2.05% for a single month, not for a year. And the second one will be at 2.10%. PVF at 2.05% and at 2.10%. .05 and 2.10. The numbers are given there, the factors and all. One positive, one negative, get me the rate IRR. This is the rate per month, 2.08%. Now listen, effective rate of interest is this 1 plus this rate power 12 minus 1. This is a monthly rate. You will have to do power 12 minus 1. Do it and let me know. Effective rate of interest 1 plus this rate power 12 minus 1. 1 plus r the whole power n minus 1. Broadly the double of that. 1 plus r the whole power n minus 1. So they will tell 14% interest. In reality, it is 27.96% interest. The reality is 27.96%, whereas what is talked about is 14%. You may get a slight up down number, let's not worry about it. Broadly, this is the answer, 27.96%. Clear? Now similarly for the other one, you will do 2.10 and 2.12. 1 to 24. Complete this. With that, I'll end it. Balance 2 question, I'll share the video to you. It's already recorded in the previous batch. When I share the video, don't look at the solution of other question. There can be slight difference. I've tried to make this time more consistent with institute solution. So because of that, there could be slight variation in few questions. So don't look at the answer for all the questions. Just end up looking questions where you need clarity. I think 1 or 2 questions, the answer will slightly vary in that video on this, what we have done today. So that will be for your question 10 and 11.